Good afternoon, everybody. This is Dennis Wilborn with the How to Make Money Trading Stocks and ETFs webinar, sponsored by the Active Trend Trading System. This is me up here. We had a really good conversation with Mike Traeger this morning. Michael Bishop, I don't know if he'll be joining us or not. He's probably enjoying the last part of the summertime there in Zurich, Switzerland. Anyway, and Mike was... apparently there's gas shortages in Texas, believe it or not, and so Mike was filling up his tank with gas. But we had a really good discussion this morning. Also, remember, all the materials we present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. A little bit about me. I am also now I'm a full-time resident back in Hawaii, and so working, getting some introductions, really good introductions with some of the traders here in Hawaii. I got to meet some of the active trend trading folks at a session we had a couple of weeks ago, and that was just absolutely phenomenal. I want to remind yourself, we've been really focusing at early warning at the active trend trading. We've been really focusing on the concept of seasonality throughout this year. I've taken the seasonality approach in, and I really believe seasonality gets us in the ballpark of when prices action is going to move. And when it moves in a very big way. That's why we focused on specifically two different industry groups and two different commodities, plus three of the index ETFs, the leverage type. But seasonality gets us in the ballpark, and what I've been doing, and just a little bit of refinement I've been working on, is that technicals gets us in the ball game. And those of you who are premium members of Active Trend Trading, I think you'll be really, you'll be very pleased with the direction what's going to be going on here, because we, have a select leverage ETFs, refining our entries with technicals, and what I'm seeing so far, it's going to result in a huge edge over other systems, and also keep it simple. We like to keep it simple. We like to keep it clear. And so this weekend, I am going to be working on a just real quick little tech tip on how to keep your weekend review simple. And after you watch that, you'll be able to do your weekend review, if you choose, within 10 to 15 minutes. And that way you'll be ready to push on and get out there and enjoy Labor Day. So what are we going to do today? We're going to take a look at the market review, stocks and ETFs that are potentially setting up, timely actionable intel review at the end of each week. So here's where we sat as of the close of business yesterday. I have not updated this for today simply because I'm just closing out the month. Okay, August 31st, active trend trading system almost up 30%, 29.45. This is the net, and then the Dow up 11 points, 11% for the year. NASDAQ up 23%, NASDAQ Composite up 19%, and we now have I forgot to change the color on this, but the Russell is up both for the year and above last year's high. So let's take a real quick look at the index and see what's going on there. So, okay. A couple of weeks ago, we had a trigger that said, hey, let's jump in on the indexes, and we got a really nice run up to a level of resistance at the 20-day moving average. This is on a daily chart. Then we get kind of a sideways move. On Tuesday this week, we're all aware of the North Korea shooting missiles across the bow of Japan. We get a sell-off to start the day, but by the end of the day, we have a very bullish reversal candle, and then we went up from there. We are now back up into a resistance area. I want us to pay attention really close to the high here. This is the closing high, which was our closing high, which was up at 24.80 and 91 cents. Okay, that reflection right there, that's the strongest day we've had. Even though we pushed higher in some of these other days, we didn't get a close above that level. So that's the closing high. Same thing, we can look over here on the weeklies. Okay, right now we are the closing high, which would have been about right there from the week of July 31st. The close that week was the closing high, 24.76. So we're slightly above that on a weekly basis, slightly below the closing high on a daily basis. We still have some room to continue pushing up, getting a little bit of negative divergence going on a daily basis. However, it appears as if we're getting a TSI tick up here on the True Strength Index, tick up on the weekly chart. We talked about this a couple of weeks ago. Mike's been really honing in on this, is we get this two-line cluster on the market forecast 2 weeks ago, 3 weeks ago actually, and we get two nice reversal weeks after that. We'll see if we have found support and if we push higher. If we break up, remember we've got resistance up at the 24.90 level, and if we throw in a right at the top of that, which is about right about there, about the 24.80 level. Now let's see how close I came to that. Yeah, 24.80.91. So if we push back, get a close above that, that'll be very, what is it, showing strength for the market. So that's what we're having with the S&P continuing to move higher. Let's take a real quick look at the NASDAQ. Okay, NASDAQ put in a really nice move, and as you can see, it broke out through the upper channel, which the S&P did also, and then has gotten up into a past level of resistance, and it has actually broken out of that resistance today. But again, it has definitely moved above its latest, closing high. And as you can see, here was the closing high about here. And so what we can do is, if we are looking for, potential pullbacks, okay, here's kind of the breakout that counts. It's this one right here. There's your closing high. And that gives you a nice level on the NASDAQ to play off of. So if we get a pullback back into the 59.28 level, that's where we'd be looking for a potential ricochet bounce. Moving up. I did highlight and bring this to folks' attention on Wednesday night, is that this little pullback here is slightly different than what we've had previously, in that it has spent a little bit, about the same amount of time under the 50-day moving average. Here we do on a daily basis, get a ricochet higher. However, I want to say the S&P actually did a little bit more harm to the S&P longer term. It spent more time below the 50. So this looks very interesting, and we'll see if the NASDAQ continues to be the stronger of the entities. So get a nice breakout. And what's our upside potential on this? Well, a couple of ways to figure that out is just take the width of the channel, which if we duplicate that line, just move it down to the bottom, there approximately is the channel. And then we can just take a line from here. Nope, that's not it. We get the proper, give us an idea of it's not going to go there overnight. But there is approximately what the move will be. Activate, move to where it broke out, which is there, and that gives the price action on the S&P. That gives it a point up here at about 6,077 on the NASDAQ. For expected move, and that could do that very quickly and very easily as it pushes high. But that would be your projected high. How does that correspond to a fib type of high? Let's just do a quick fib retracement. And as you can see, that actually equates to about the 1, 2, 3, 6 retracement or extension, excuse me, extension. So just the price action should go just a little bit above that. And so interesting how the math works out on those. So let's get rid of that. Let's get rid of that. But that's a quick way you can do your own analysis real quick on a weekend to say, okay, here's where this is expected to go. What chance is there of it getting there? So good information. Let's take a look at the Russell real quick. Russell, R-U-T. Again, the Russell had the most to gain because it had lost the most. We lay a fib on the daily part of the Russell from this high down to this low, and okay, where are we at right now? Right now we are approaching the 618 retracement. Once it broke out above this 382, it improved the probability that it was going to go to the 50, and once it broke through the 50, of course, it improves the probability of it going up to the 618. This was an excellent move. And we were trading part of a TNA trade. It broke this trend line and bounced us out on Tuesday. However, some folks did stay with that trade and basically pulled out with it about somewhere between an 8 to 12% gain off of our enter on TNA back down in here. So excellent work on that. We are extended away from the moving averages right now. And so I would anticipate to see some kind of a pullback into the moving averages. It still looks on a daily chart like the longer term momentum is starting to shift up, which is shifting up the longer term momentum on the weekly chart. So these are two really nice positive bullish candles on the weekly chart on the Russell. And we can use those two moving average about the 1394 level to say, okay, that's where we would potentially get some kind of a pullback. And that corresponds, as you can see, with the 100-day moving average. So excellent. Let's take a real quick look at, well, let's go back to the chart, to the other. There we go. And we'll track through the rest of this. Here's what I'm looking at next week is one is IWM, QQQ, and spiders, are they approaching resistance? And the answer to that is yes. They're basically, we could say that they are at resistance. Now, are they going to flip and drop down from that? Gold. Gold got a big surge pushing up. Especially when there's any instability, overseas or globally, gold is going to typically get a bid. So is there more upside to gold? Our seasonality says that yes, there should be some more upside to it, but clearly it is extended. We have to wait on both the intraday and the daily charts to get a pullback. And then some of the stocks I'm looking at going into next week: Netflix, Tesla, NVDA, LABU, which is a 3-time leveraged ETF of the biotechs, which really took off this week, YY, Cruise, and ESNT. The extension that we're seeing on LABU and also gold, those are the things that we're currently, that I've gone back and now have studied. Mike Traeger and I talked about that a little bit today, this morning. Regarding this current research that we've going on. The research will refine our entry down to a where it won't be just taking a look at the 20 or 30 or 40 year charts that show seasonality, but refining it down to, okay, every year there's a bracket there, when and what specifies the bracket for when is the proper time to get into a position on one of those ETFs. That's what's going to be provided to the premium members of the active trend trading service. And like I said, it will definitely give us a higher, a better edge moving forward on our entries. And so I'm really excited about being able to provide that for everybody. So the reality of trend trading: 1, identify the trend, define the area of interest or value, define the triggers, strategies, and targets. Never chase a signal. Never. There will always be another day, another market. If you miss a move, so what? And when we can develop that kind of attitude that, yeah, I missed this move, but so what? There will be another move, which we've proved over and over and over again. Then that's when we know that we're making progress. So here's where we're sitting with the active trend trading system. Overall, we're up about 29%, as we said, pushing 30% on the total strategy 1, 2, and 3. Strategy 3 process is really moving up close to 100% for the year, 22% on strategy 2, and with what we're going to be introducing over the next 2 weeks during the month of September, because September is typically always a down month. So we're going to do some refinement. So we are positioned and ready to go into the October end of year flurry. And we'll really see a difference in our strategy 1 trading. So there's our monthly, where we're sitting equity curve wise. And so and this white line there is a forecast for a 40% gain for the year. And as you can see, the P&L has popped up above that now, and we're pushing. I did modify my target for the second half of the year to make the gain for the second half of the year our goal 40%, which will put us actually up about 60% for the year overall. Not there yet. Talked a little bit about seasonality and the pillars of the active trend trading system. Pillars 1, what to trade. Pillar 2, when to enter, when to exit, what strategy to use, and what to expect. Every strong system is based on these 5 pillars. If you're trading a system that doesn't have one of these pillars, then you need to do some more research or refinement of your system, or just, hey, become an active trend trader. And if you want to become an active trend trader, right now through Labor Day, this goes away. Monday, it goes away. It won't be back for a while. Basically is a opportunity to become a trend trader for a 40% savings off the regular monthly price. The one thing that we do guarantee is once you become an active trend trading member, your membership will be locked in at that price. We never increase that price unless you drop off out and then come back. Then you will there will be you'll have to take care of the extra membership premium. So seasonality is what we're looking for, a season of explosive growth. And I'm going to take a look at a couple of extra charts before we run. So, but I just want to remind everybody that 1, if you're a premium member, stay tuned. We'll be on the final hour straight up on the hour. You should have received 2 already. You should have received 2 alerts today for triggering us into selling premiums on the selling premium on strategy 3. 1 for Tesla, 1 for NVDA. And so those have already gone out. Let's take a real quick look at what we're kind of waiting for. I'm going to zip over here. Here's the Russell. I'm going to get out of there. I'm going to take a real quick look at what we are looking for on GDX, which is gold. Okay, as you can see, it has an upward projection of somewhere up here. Some people have their upward projection on GDX up here about at 2750 on up to about 29. From where it's at right now, that would be a heck of a run. Translate that into Nugget, which is a 3-time leverage of the miners, and that equates to a move up here to about 57.92. We're sitting at 40.40 right now. I would really like to see a pullback into one of these moving averages to be able to jump on it, get into a trade on Nugget. simply to kind of ride that out through first part of October, and then the move on from there. So let me get rid of that. Eric asks a question: if is dust making an inverted hammer today, what will be the swing level? Dust is the opposite, the inverse of that, I would say. Yeah. As we've chatted before, Eric, what happens with the leverage ETFs, though, is that it's kind of challenged to, trade them off of horizontal support because of the contango and the backwardation that happens with the leverage ETFs. What we want to do is we want to go to GDX. What kind of a candle is GDX putting in today? And as you can see, what is happening is GDX is putting in a potential hanging man. Now, is this a hanging man that we should want to get short on? Well, look at the trend here on GDX. One, it's up, where all the moving averages are now in gear up to the upside. Now, we could get a pullback down in the 2380 level. You'll have to take that, look at dust to see what their level would be, equivalent level would be. So utilize GDX to plan your trade for both dust and nugget. And because on here, the horizontal support levels and resistance level, they mean something. And you can plan against them, which is a good thing. And so let's take a real quick look at Netflix. Maybe. Netflix. Be looking at Netflix for next week. We'll see if we're going to roll back over, but look for Netflix to pull back into the moving averages for a rebound higher. It may just stabilize right here and provide a double doji sandwich, which you get a doji, and then it rips higher. And if it rips higher, expect the move to be about the same as this move here, which that was about a $5.48 move. And as again, Netflix is looking good. And what else did I want to look at real quick? LABU. And again, this is one of those where, hey, it has reached up. It is extended away from its moving averages. We have got a level of support here. Again, on LABU, expect a pullback into the levels of support, which is, in this case is about 74.61. You also are going to want to bounce this against IBB, which on IBB, it would mean a pullback into the 327 to 330 level for an anticipation of a move, rebound higher. It's got to get, again, it is well away from its moving average, and it will do a reversion to the mean at some point in the future. So, okay, guys, that's what we've got today. Again, if you're not a premium member, now's the time to jump on board prior to Monday, because that's when the prices do go up. So with that, I'll bid you adieu. Have a great weekend, great Labor Day weekend, enjoying family, friends. God bless everybody. We look forward to a really rock-solid September to go along with the rock-solid year we've had so far. So with that, God bless everybody. Good day. Hey traders, don't miss this opportunity to become a premium member at a big discount. This opportunity is good through Labor Day, this coming Monday. God bless and thank you. See you later. Bye-bye.